Hi Akshay, I'm Saransh, co-founder and CEO at Nova Benefits.
एक मिनट रुक जाओ, रेडी होने दो. चलो ये कर लेते हैं. This could be a great intro.
Saransh Garg was made for entrepreneurship. His journey is the quintessential Silicon Valley founder story that starts with his first freemium business being launched straight out of college when he created a free ebook that eventually led him to becoming a best-selling author. He started his career with Bain, a leading local consulting company, and then joined Accel, a leading VC fund, in their investment team. This served as an ideal launchpad for his first venture that was a part of a YC and raised a Series A round of $12 million. In his current role, Saransh is the co-founder and CEO of Nova Benefits that helps companies improve their employee wellness through better quality health insurance and a host of wellness features. Here's Saransh telling Akshay Datt about his journey of building multiple businesses worth millions of dollars.
Then I read this book 0 to 1, which talks about building things from not doing incremental stuff, but doing things from scratch. And it also gives you a framework on how to think about ideas. I found that book very inspiring. And then I read a bunch of other stuff, but that really pushed me into going deeper into, okay, now I was inspired, but kaise karna hai, didn't have a clue yet. Anyone who's thinking of starting up needs to figure out a co-founder with complementary skill sets. In my case, someone who could actually build the product, and then what the idea itself would be. I had neither of those. So I thought maybe I should join a startup or I should join a VC fund to learn what it takes, what are the ingredients. And I ended up eventually joining Accel. It's a VC fund in Bangalore, earliest investors in Flipkart and so forth. And that was a great stint because as part of joining Accel, I got to speak to several entrepreneurs. And I used to think that you have to have this clarity of thought from day one on what it takes. And I realized you need to have directionally, you need to be right, but it's okay even if you have 30% of the answers on day one. And then about at the end of my couple of years at Accel, I found great co-founders and I started my first company.
Before we come to that first company, at Accel, did you form a thesis on who gets funded? And this is a question in the mind of every aspiring founder that, will I get funded? Is this good enough to get funding?
So yes, so I was actually looking at fintech investments for Accel and I was looking at different sectors and cuts. There are like very business model specific things that you look at. There are broadly a few things that any VC fund and maybe even any founder should look at if they're thinking of starting a venture-backed company. So one thing that, for example, stood out for me was how large the market size should be. I think one very non-obvious thing that a lot of companies don't get right is going for a market that's not a very big market. Because often you're looking to do something unique, but when you're looking to do something unique, you often end up with a market that is either non-existent or very tiny. And it's very hard to find large markets. Large markets broadly mean about $1 billion in revenue potential. And the reasoning there is like, if a startup kind of earns 10% of that, so you'll make $100 million revenue business and you'll have like $1 billion unicorn kind of a company. And what I ultimately understood is either you have a large market on day one and great differentiation so that that market moves to you. And it helps if that market is also growing at some pace. Or you start with a very small market today, but you have conviction that over X amount of time frame, this is going to become huge and nobody is looking at it in that way.
Okay, got it. And what about the other stuff? So assuming you have discovered a big addressable market, like quality of founders and stuff like that.
Yeah. Then the second thing is team. It's really about the founders at the earliest of stage. So you need someone who I basically think of it as some one person, like the founding team should have the ability to build and then the ability to sell. If you have either one of those missing, you don't have the right set of co-founders and the complementary skills out there.
Okay. Would VCs look to fund where the co-founders have just met the way you were thinking that, okay, I want to find a co-founder and start something? So do they look at like a history between them, or can you just like pick up two random people and make a team of three? And I mean, random meaning like fairly new.
Right. I think I'm actually an example of where both companies we got back, but I didn't have a long pre-existing history with my co-founders. But I think it's very important that before you decide that someone is your co-founder, you need to develop that working chemistry and relationship and values alignment, at least over a 3 to 6 month time frame. So it's not needed that you know the person from long back, but you need to have a lot of comfort, a lot of time needs to be spent before you actually join a startup. And so it's going to be very natural for a VC to ask you those questions, and you should be able to articulate why, we are very comfortable with each other. This is all the things that we've done. So I was in my 2 years at Axel, I was always looking for co-founders parallelly. Paul Graham of Y Combinator has this really good idea where when you're thinking of starting up with someone, start working on side projects. It will not be the actual idea. Maybe a thread opens up there, but at least you'll know what the working equation is going to be as part of that process. When I was at Axel, I was looking at fintech investments, and this was like 2016 to 18. We were funding a bunch of lending companies and consumer lending, B2B lending, and so forth. And one of the qualification criteria that we used was how good is the collections strategy of the company? Because in lending, it's easy to give money, but how well you're able to collect back is what really matters. And there were no companies which were actually just focusing on collections because it's an unsexy industry. Nobody wants to be the guy who's kind of calling and asking, but it's also a very valuable industry because there's an element of client servicing and relationship with the borrower. But also, if you're not able to get the money back, you don't have a business that exists. And so that was our initial thesis. You need digital tools to improve the borrower experience of collections while also improving the total collections that a company is able to do.
So this was like a SaaS product that we thought of.
Correct. So with this concept in mind, we started. Very quickly, we realized this is great, but then the whole journey of product market fit is quite tricky. But that was the initial insight. And market size, this was a large market. We were focused on the US market. So market was huge. So actually, even in my last few months at Axel, we were already brainstorming this idea. And we had also applied to Y Combinator. And when we got the interview call, I was like, okay, folks, I want to move out now for sure. But I was kind of ready to move out even before that. But that was one of the triggers. And then finally quit. We did the interview in San Francisco for YC. And the great thing about YC is even at the earliest stages, they will back a company. And we fortunately got through that. And
they essentially back founders rather than businesses.
I would say both. So they're agnostic. They also look at business metrics and do it. But yes, even if you're just a few people with an idea, it's also a path. And we were fortunate to get the YC investment. We spent the next 3 months in SF through their bootcamp and refined our idea and our pitch and our product value prop.
Okay. So what did you want to build? Was it like a CRM where you can upload a list of people to whom you have loaned money and then it will automate the communication and all?
Correct. So our initial ideas were today collections are done. There's no intelligence that is used in terms of where the efforts need to be directed. It's just a very human driven process where someone is calling. So we said, okay, we'll start with collection scoring, where we will break up the borrower segment into who's more likely to pay. There are basically two variables: how likely is someone, ability to pay and intent to pay. These are two metrics which you have to build a score towards. And then based on that, you can have a strategy for communication over text, emails, even maybe a phone call. So our initial hypothesis was text messages aren't being using. So let's explore that. Intelligence is not being using. So let's do collection analytics. And our third thing was like today, a lot of conversations are happening on the phone. Can we record those conversations and use that data to improve the scoring of ability to score and intent to score? Interestingly, the idea which we thought is least likely to work is the one that actually worked. This was the call recording and using speech analytics. And even there, a slightly different version. But I'll tell you, the story is very interesting. So we start off with this idea of text-based collections in the US market. And very quickly, we realized you can't even text people without their permission in the US.
Oh, okay. It's not like India.
Yeah. You get like a straight $1,000 fine and so forth. Very quickly, that idea went off the roof. On collection scoring, companies were already doing that. And if we wanted to do it for them, they would have to give all of this data to us. And it was a very long and tedious process. On speech.
What is collection scoring? Like probability of recovery?
Yeah, it essentially is that you're trying to predict who's more likely to pay. If you have loaned a bunch of money to a bunch of people, what is the actual value of your portfolio? And based on that, what your strategy should be. So yeah, the reason why collection scoring did not kick off is people were already doing that. And if we actually had to do a job better than them, they would have to share all of the CRM data with us, which is very risky for a very new company in a very regulated industry. So that didn't take off. So then we came to speech analytics, and we talked about how there is a lot of conversational data which can help predict. All of that was interesting and fancy, but there was a here and now problem that lenders in the US wanted to solve. And that was, there's an entire book of things that a person needs to follow, a collection agent needs to follow. There are entire rules. For example, even to open a conversation around debt collection, an agent needs to say the purpose of this call is to collect a debt. Anything that you say will be used against you. Now, if that statement is not sent, there's a liability on the company collecting the money. And like that, there are 50, 60 other rules.
Compliance issues, yeah.
And the entire process was manual, where a person is going to listen to the call. 2% of calls were listened to, and you will kind of say, okay, this was not done. And then the feedback was given. And we said, okay, let's do it for 100% of the calls and let's give instant feedback, or at least like within 24 hours. And that started taking off. That became like a wedge in the market, because that's a pain point that already existed and people were spending a lot of time and money. And that was actually my first experience of what does it mean about finding that product market fit. Start with a bunch of hypotheses, and then you're very convinced that this will work, but it's not until you've not had these 50 to 100 conversations with your clients, you're really not sure what you're doing. And one of the advice, in fact, Axel invested in the company. One of the advice our partner gave us was that just speak to 50 to 100 customers. You've not done that yet. And that really got us on the path of finding the value prop.
Okay. But you didn't continue in that, right?
So,
what happened?
Yes. So I did Prodigal for about 18 months, and Prodigal is continuing to do well. They've raised their Series A. Me personally, I had to move back to India, and this was a more US focused business. So I kind of took a back seat because it would require me to be in the US, and for personal reasons, I wanted to be in India. So my co-founders are continuing it. And then I came back and thought
But you knew from day one that this is going to be US focused, right? What changed?
I think initially our idea was that we could run it as a US India setup.
Like ops in India and...
Correct. But since I was handling product, often for good product management, you need to be on site and on the location. So that was one of the things. And I think the other thing was you could also have differences in terms of your vision for the company. So we wanted to take the companies in slightly different directions as co-founders. And so that also meant it's more prudent of me to step back because I had a differing idea, and for my co-founders to continue and take it forward, which is what we did, ended up doing it.
So which is where you were talking about that the importance of alignment of vision of co-founders.
Yes. So I think one of the things as a rookie first-time founder, I didn't appreciate as much as how important it is to stay aligned on a day-to-day level. I think that is definitely something that I took away, and I respect a lot more in my second instant, that you need to actively work to stay aligned on a week-to-week basis. So for example, in my current company, me and my co-founder, we every week have half-an-hour sessions just around alignment with no other agenda. Just this is what's happening at my end, this is what's happening at your end, and if there are any open questions that we kind of address. So yes, I think that was also something that was my takeaway.
So as co-founders, you need to over-communicate.
Yes.
And make sure that both are aligned.
Correct. You need to almost over-communicate, just set time for it, and constantly stay aligned on all aspects of the business.
Okay. So when you came back to India, did you get some sort of exit from that?
Yeah. So in startups, you have a vesting schedule, and then whatever equity is unvested goes back to the company, and whatever is vested kind of stays with you. I chose to continue to hold my share in the company. Big believer in Prodigal. My co-founders are building a great team, and they're taking the company forward. And so that's how I'm like a cheerleader for the company.
This vesting thing is basically a way to make sure that those who stick around in the long haul get more equity, like it takes care of that, like the duration of someone.
Yes. I think vesting is a great mechanism of ensuring that for the value you've created, you are compensated, and the value which you might have created or are not able to create, that goes back to the company, which then can be reallocated. So I think it's a great balancing mechanism in that sense. Yes.
Okay. So then, what did you figure out to do?
So I met Yash, my co-founder. I met him through a friend from IIT Bombay. He and Yash were colleagues in Samsung Korea. Yash is from IIT Delhi and he has the computer science background. Once we met, we said, okay, let's do a side project. And both of us would be quite into it. We would always turn up on time. We started having daily catch up sessions. So if the person you're thinking of starting up with is actually not just talking in terms of words, but is also giving time and helping you think through ideas, and you're actually spending time and investing. I think that's what both Yash and I started seeing with each other. And we spent that 3-4 months brainstorming, ideating, building stuff together. And at some point, we became very comfortable with each other and we said, hey, why don't let's just start up and so forth. And that's how it happened.
And tell me about the hunt for the right idea.
Yeah, that was quite interesting. So we started putting ideas on a spreadsheet. At some point, we had like 66 ideas and it wasn't going anywhere. It kind of felt like this academic exercise, but there's a company that we had to start and we weren't able to make much progress. So then we said, okay, let's find a common area of interest, financial services. So we just started looking at ideas in financial services. Even then, there was lending, payments, investing, insurance, and so forth. Then we added a bunch of criteria. So our first criteria was how passionate are we about each of these problem statements. Both Yash and I would rank ideas on a scale of 1 to 10, and any idea where the average was less than 6, we eliminated. The next one was how large is the market? And then the next one after that was, is there day one monetization? We were starting during COVID time and the sentiment wasn't great for starting new companies back then. And we said, money should be made on day one. We didn't want an idea which will, take some time and then you monetize, that kind of an environment. And then the next thing was like, what is the delta we can create in terms of an experience? There's Kunal Shah's famous Delta 4 theory, something very similar to that.
What is that theory? Can you just talk about that?
Yeah. So Kunal Shah, he basically says that if you are able to provide a Delta 4 experience to a customer, and he basically says Delta 4 is a level of differentiated experience that once the customer has tried, he will not go back to the older way of doing it. For example, Uber and Ola had that Delta 4 because you could press a button, you could get into a cab, and you don't even have to pay because it gets automatically deducted. Once you've experienced that, you will never go back to the older way of doing it. And that's what we felt we could create in the employee wellness and corporate health insurance space. These were essentially the 4 parameters on which we took the entire set of ideas as a grinder. And then we finally narrowed down to insurance. And then within that, we focused on health insurance because of COVID. And then we ran a bunch of experiments to figure out that B2B was the right way to do it instead of B2C. But that was basically the framework.
Okay. So you wanted to do health insurance, the customer experience in general, or did you figure out that there is more pain in the corporate side?
Yes. We were actually looking at insurance. There was motor insurance and health insurance. These were the 2 big markets. But because COVID happened, all the cars were locked up and everyone was thinking about health. We started thinking about health insurance as well. And then whether to do B2C and B2B, we ran an experiment. We asked people that you pay us for our time, pay us an hourly rate. We'll save you the effort it takes to figure out which policy to buy. And we'll help you decide and you pay us for that, for our time. And what ended up happening is we had like 5 people pay us like $500 and we had one company pay us $15,000 because that company was taking it for some 30 employees. And what we realized is that it's much easier to go down the B2B path. It takes less effort. You're covering a larger number of people. And that's why we doubled down on the B2B side. We also looked at data. Most people in India are covered by their employers first. Even if I go back, my first health insurance was through BCG. So most people in India are going to get covered through their employer first, and then they'll take additional insurance. So that's why we went down that route. And also like the existing solutions were pretty bad on the B2B side. On B2C, you still had some platforms, but on B2B side, you just had these offline traditional brokers where it's super complicated and there's no transparency.
Okay. So the role of tech here would have been in terms of creating a e-commerce like experience to compare different policies and choose one in your cart and then check out. Like that was the role of tech in this?
We first just spoke to like 100 HRs and tried to understand what's the real problem over here. We realized that yes, the buying process is difficult. There's no transparency on what the right pricing is. So across insurers, there could be like a 50, 100% pricing. And it's also not a standardized product like a B2C policy. Every company has their own policy and you have to take that into account and give a price. The second problem was the claims experience is bad. People don't have transparency on when the claims will get done. If there are certain deductions from the expected claim amount, why those deductions are there, and a lot of back and forth that goes on between them. So the customer servicing part was broken. For the HR, every month they have to add new employees and remove the ones who've left the organization onto the policy. That process was entirely manual. And another insight that we had is that ultimately health insurance is given by a company to retain their talent. And if you want to retain your talent, you're giving a benefit that is only taking care of. Like health insurance is used only by 5 to 10% of people who are actually falling sick. But there are a bunch of other employee wellness initiatives that you can do as an organization so that everyone in the company feels like they've gotten a benefit. And that kind of led us to realize that what we need to build is an employee wellness company where health insurance is one part of it, but there's doctor consultations, there's mental health, there's day-to-day fitness. And all of these pieces together then ensure that all employees feel taken care of and it helps the company in its goal of retaining its talent.
Okay. How would the non-insurance pieces be monetized, like doctor consultation, fitness? You thought of charging extra for that? Or?
There is a willingness in companies to pay for it as well, because especially during COVID, people weren't able to access a physical doctor and a lot of these consultations were happening on the phone. So a lot of companies were purchasing these teleconsultation solutions. Another model could be like where the company gives this access employees to the first call for free, and then you can charge for the next call after that experience has been made. So there are these various forms of monetizing of that, both the company paying or like a mix of company paying and then the employee paying and so forth.
Okay. So what was your product version 1 and how did you go to market?
Yeah. So our V1 was very simple. We basically created a great UI and front end, helping people to just more than it was not even the buying process. It was more first once the purchase has been done, where all the employees have a mobile app and a web app on which they can see the insurance policy. They can see what's covered, what's not covered in the policy very transparently. And then they can also track the claim status. The HR can see at a company level and an employee can see for their individual level. And we also integrate with HRMS systems of companies to automate the addition deletion process. So this was like the V1.
So essentially then it was more about helping them manage their existing health insurance better.
Correct.
Okay.
Taking the pain of not having claims done on time and this enrollment process. That was essentially the V1. Yes.
Okay. So this was more like a benefits approach than a selling insurance approach, at least in V1. Like you were not.
Yes, it was more experience. We were solving for customer experience in our V1. Yes.
Okay. So for tracking claims and stuff like that, like how did you get all that data? Like the insurance companies did an API integration or did you get access to that part?
Yes. So initially you can always set up a manual process where you're picking the information from a very old school database and then you're just manually feeding it into your system. But now we've started the process of integrating with insurance companies and TPAs, which gives that information more readily and at a higher frequency.
Okay. And for the insurance company, you were essentially like a experience partner.
Yeah, correct. I see it very similar to neobanks where they would work with a bank.
Existing bank, yeah.
But like create the entire experience part of it. So I think that was like our V1 as well, where we're working with insurance companies, but improving the experience for our clients. Now, however, our vision is much bigger where we are building the entire employee wellness stack. So we are ensuring that all the health and wellness related needs of a company, not just when someone falls sick, but even when to encourage them to stay healthy, they can get through Nova.
So tell me like a chronological sequence of how this evolved. So in V1, I guess you were not really selling insurance products per se, but you were selling a wellness package, I guess, with those other benefits that you mentioned. That was what you were selling in V1?
So V1 was more like the UI layer just for health insurance. And if a company wanted to purchase other benefits, we could facilitate that for them.
So this you would have been giving away free, right? Because there was no monetization in this.
Correct. We're now like a licensed insurance broker. So now, when you're a licensed insurance broker, the way you earn money is the insurance companies pay you a commission
On the premium collected.
Correct. So that's like the business model for the company, and then like if companies want to add other benefits other than health insurance, we can facilitate that as well for them. So that was like V2. So in V2, because as we spoke to HRs in terms of why they're really giving health insurance and what are the other challenges they're trying to solve, we got to know that, okay, there are all of these other wellness offerings that they're looking for. And with us, we become like a single point of contact where all of their needs are being met.
If you like to hear stories of founders, then we have tons of great stories from entrepreneurs who have built billion-dollar businesses. Just search for the Founder Thesis podcast on any audio streaming app like Spotify, Gaana, Apple Podcasts, and subscribe to the show.
So did you integrate with other companies for those other needs, say teleconsulting, or did you like build all of these in-house?
Correct. So our approach, so as a startup, you can't build everything, and it's not even wise to do because you need to stay focused. So our approach has been to partner with companies that are already great at doing it. And that's what we've been doing. So on the doctor consultation side, we are working with Practo, M-Fine, MediBuddy. On the health checkup side, we are working with companies like Xyla Health. And similarly, we are exploring other partnerships for other offerings as well.
And so you would be able to aggregate services from 2-3 different partners and then sell it at a monthly subscription fees, which would be including multiple services for a corporate.
We can go to a corporate and design like what is the right gamut of employee wellness benefits that would make sense for them, and then operationalize it as well for them.
And what was your go-to market? How did you onboard customers? How did you acquire customers?
Yeah, so in the B2B side, you essentially have your inbound and your outbound channels. So on the inbound channels, you do a bunch of SEO, SEM. We're quite active on LinkedIn as well. And based on that, you get inbound leads. And then you have your inside sales team, which is speaking to clients and converting. And then on the outbound side, you reach out to the right decision makers in the companies. You set up meetings and then you give a demo and then you try and win that account. So it's the standard B2B sales process that we are following as well. I think what's interesting is just the number of channels that are out there for building your brand, and even to generate leads is expanding. And so we're always try to learn in terms of what's working out there and try to execute that at our end as well.
So what is your sweet spot in terms of organization? What sector or what headcount?
Yeah. So we work with companies as small as even 7 employees and all the way up to 2,000, 3,000 employees as well. We've got clients like Dream11, CoinDCX, PharmEasy, and the likes. So a very high growth startup just getting started to all the way as medium-sized companies we are working with.
So like mostly on tech companies, or do you also do like say manufacturing and other old school businesses?
Yeah, we like to say employee first companies. Any company which is putting culture first is thinking from a very HR centric lens, and it need not be tech companies. Well, yes, there's a great overlap, but we found like several manufacturing companies as well. We found lots of IT services companies as well who are thinking from that lens. So those are the more progressive employers who care about employer branding, who really care about their employees and are investing in their HR practices. Those are the ones that we work with.
Got it. Okay. So let's continue down that product journey. So in V2, you added on the suite of benefits that could be purchased. So when did you do stuff like launching the app for employees to manage on their own and stuff like that?
So initially, we just had a web app where kind of HRs and employees could start using. But the natural question that HR started asking us is there a mobile version of it that we can access and so forth? And we would say, yes, you can just go to your mobile browser and then log in from there. But that was also not good enough. And we had this request of, can we actually have a mobile app as well? So we executed on that in both on iOS and Android. Now we have clients over there, but that was not needed on day one. On day one, we just had a web app.
That app is basically for the user, like the employee.
Correct. Yes, that is for the employee of the company. The HR as an admin can also access, but it's more meant for the employees as well, so that they can see all the benefits that a company is giving and also start utilizing, making claims and track them and get them completed.
Okay. So that becomes their one-stop shop to see what all do I get when I
Correct.
join this company.
Correct. It should be like, an employee joins a company. It should feel like they've entered the matrix. They pressed a button and there's a superpower in terms of benefits that they can now be plugged into. That's the feeling we're trying to create.
Are we at the present stage now? This is the most recent product development?
Yes. We are only 15, 18 months old, but this is where we are right now.
So what's the roadmap in terms of what do you think you will build next in the product?
So our long-term goal is to create happier and healthier workplaces in India. One of the things that I see happening is because as the startup economy is growing, there's a lot of pressure on people because of the hustle culture and kind of executing at a rapid pace. We want to be an antithesis on that. We want to bring employee wellness and work-life balance back into the picture. Otherwise, we run the risk of all burning out and this not being sustainable. The way we are trying to do things differently is make benefits simple to use and personalized down to every individual. And that will happen when everyone in the company feels like the company has noticed me, given me something that I actually use, and I've benefited from it. And it's improving my health and wellness, not just for me, but for my family members as well. So that's the goal with which we are building all of our services.
Essentially, you're like a HR help desk for an employee, but focus more on health and
wellness.
benefit.
Yes.
Okay. And what about, like you spoke about, making people fitter by giving them tips or gamifying fitness or helping people to quit smoking and stuff like that?
Correct. It's not yet out, but we're trying to see how we can help people set fitness goals and gamify that and add a social layer to it so that there's like a healthy discussion happening on things other than work within a company, which is also like an HR pain point on how do I get my employees to be talking to each other outside of work as well.
So people could use the app to, for example, form a badminton club and stuff like that. Like more social element could come into the app.
Correct. So at least they will all be able to set their goals and then be encouraged by their team members to move towards those goals and then also get rewarded for it as well. So yeah, that's the direction we're thinking in.
Got it. Okay. So what's been the traction so far? When you launched, how many employees were you signing up every month? What is that rate like right now? Or tell me about how the numbers have grown.
So I think in our first month, we had like 2 or 3 companies, about 20 employees each. So about 60 employees were being added. But then in month 4, we started seeing that even the biggest companies out there, like the largest brokers, clients were already shifting from them to us. And we were actually quite surprised that we are a new kid on the block and these clients are already having a not so good experience with the largest companies out there. And then since then, we've kind of now scaled up to almost 100,000 people covered on our platform, more than 200.
Is the migration easy to do? Say I already have an existing corporate health insurance.
The thing is, because the competition that we face are not SaaS companies. They are like traditional brokers. They've not really built any stickiness with their clients. So there's a very simple replacement that can happen where we come in and it's a very smooth transition. And even claims from the previous insurer are taken over by us and we help process those. So we've not faced that challenge.
I mean, even in terms of technically like getting that data.
So in terms of how that switch happens is the way insurance companies price an insurance policy, they look at what is the risk profile of the group. And for that, they ask for 3 pieces of data: the last year policy copy, which has the terms and condition, the present day demographics of employees like date of birth, age, gender, and so forth. And then what was the claims history so that they can assess the risk profile. And then based on that, a pricing is given and then the client decides whether to switch it or not switch or continue with the existing. So those are the 3 documents that are very easy to get. But the insurance companies and brokers are obligated to give it to a client. So they just need to request. That goes out to all the companies that might be competing for the business of a client. And then based on that, the client finally decides based on value propositions, the tech platform and price in terms of who they want to go with.
Okay, but this switch should only happen at the time of renewal, not like mid-year.
Yes, yes. It's a 1 year. Typical contracts are a 1 year contract. And so it typically happens once in a year. Yes.
Got it. Okay. Okay. And how do you help insurance companies to onboard? Like you said, even a company with say 10 employees. So I guess typically insurance companies don't really deal with that size companies, no?
So there are a bunch of insurance companies that are quite comfortable with 7 to 10 employees as well. And what has been missing is someone who's responsive to a client where they ask for a quote and they can get quick answers. They want to change policy terms. They understand the price implication. Insurance companies are not structured to do that yet on the B2B side. And there's a long lag time. And then you also need comparisons across insurers. So that's where we come in and bring that transparency and bring that experience for companies.
Okay. So you basically have this brokerage license which allows you to sell insurance policies of all insurers, and then you collect details of policy offerings of each one and then productize those details into easy to compare format so that customers are then able to do the decision making in a
Correct.
hassle-free manner.
Correct.
Mm.
Correct. Exactly.
Mm.
Exactly.
Okay. And do the insurance companies customize policies for you, or there's like off-the-shelf policies are already made?
So the interesting thing about corporate health insurance policy, unlike B2C policies, all the policy terms can be changed. So every company has their own policy. For example, one variable is what is the family definition? Are you covering only employees or spouse and children or parents as well? Another criteria could be like what is the sum insured? 3 lakh, 5 lakh, 10, room rent limits, co-payments, waiting periods, and so forth. So all of these are modifiable parameters. For a company taking it for the first time, what we tell them is, look, these are 5 other startups like you. This is what they're going for, and this is what you should try and do. For a company that is much larger, they already have a set of policy. We tell them that these are certain improvements you could make in the policy. We also give them other benchmarks. And then we consult them as to this would be the right set of benefits to give and help them in that process.
Got it. Got it. Okay. Okay. And so we were talking of the numbers in terms of traction. So now how many additions do you have every month? How many employers sign up?
Yeah, so I could tell you the overall numbers. We've now got about more than 200 clients and about 100,000 lives on our platform that are insured.
And your earning is only through the commission on premium, or are you also selling those value-added services?
Yes, right now our main earning is through the commissions. Right now we're just acting as a facilitator for other offerings, but maybe later down the line we will explore some of those options as well. But our main source of earning is through the commissions from the insurance companies.
Okay, okay. So these value-added services, you are just like building a pipe for the service providers and the employer to get connected.
Correct. We are right now solving for experience, becoming a single platform where they can access everything.
Okay, okay. And what do you earn like for every policy sold? What does your unit economics look like?
So typically in the corporate health insurance space, you roughly earn about a margin of 5% on average for insurance policies that you send. And that's essentially the business model. So whatever is the policy amount, about 5% is what we kind of earn.
I guess the average policy amount would be between 5 to 10,000, I guess, something like that, annual.
So at a client level, you can say like about 10 lakhs, 20 lakh in that kind of a range. And then per employee, it would roughly be about 5,000 rupees per employee.
Right, got it. Okay, okay. So, and what's your plan in terms of growing customer base, like your customer acquisition roadmap?
Yeah. So we want to, by 2025, we expect to be growing from a base of 100,000 to 10 million people insured through our platform. So that's the journey we are on right now and building towards that.
In what ways? Like, do you have some, like, for example, do you want to do like a TV ad, or do you want to get a celebrity influencer? What's the plan there in terms of?
Honestly, I don't know. I still have to figure it out. That's the question I'm asking. But some of the things, I think definitely building a brand is one part of it. So that people, like the way we message and how we can get people's attention about how we're doing, that's definitely one part of it. But also in terms of how we could add value in our sales process itself by giving companies benchmarks, by telling them what they could be improving in their policy. If, let's say, Omicron is happening, what does it mean in terms of risk for them and so forth. The more specific channels, like what channels will actually help us get there, is something we have to figure out. we found a mix of inbound and outbound helping as well. And the larger the company gets, you need to have a more higher touch sales process as well. There'll be more decision makers, and you have to kind of speak to all of them. And that's kind of what we are doing.
Is the product built to be self-checkout, or it's built to be sold with a consultant, like a consultative call, and then?
Yes, yes. So for smaller companies, for less than 100 employees, we even have a calculator, so you can almost do a self checkout. We've not yet closed the loop where you'll make the payment, because we found like people still want to call. It's still a 2 lakh, 3 lakh kind of amount. So they still want to speak to someone on the phone before closing out on that. For larger companies, for policies which are more than 5 lakh, people expect a consultant. They want to have lots of iterations on their policy terms. So it is like a human in the loop in the selling process.
You are collecting data, and does that data give you any unfair advantage, or does it help you build a better moat? Because you're getting data of employees of the corporate, what kind of claims they're making, what is the claim settlement ratio and stuff like that. Does that generate to some sort of a flywheel for you?
So I think in terms of data, it helps in terms of capturing the risk of what is the risk of the population. But that data is available to everyone, because during the renewal process, that data is available to everyone. What is more interesting is, and that's not happening in the industries, when you receive the data, how are you analyzing it and giving insights to the client? So for example, telling a company that, hey, you have a large base of people who are in the 25 to 35 age group, but you don't have a maternity policy. So you might want to add that. Or let's say you have a large number of claims coming from parents, and it's happening because employees are not being very discerning in terms of the expenditure that the company is taking. So maybe you want to have like a co-payment of 5 to 10%, so that employees also have some skin in the game when they're deciding which hospital to go out. I think how to use that data itself much better is something that can be done. I think over a longer period of time, what you could do more interestingly is, for example, if there are employees who are not making any claims, could you reward them in some way? Because, they're not really benefiting from the policy. For example, could you sell them a personal health policy which comes without any waiting periods? Those are some interesting things that can be looked at with that data. I don't think it's going to be a moat. Everyone's going to have access to it, but it's more on how you analyze that and create unique value propositions for the client. That's going to be the more interesting part.
Essentially, this data would help at renewal time. When the client is renewing, then you can give them AI generated recommendations.
Right. Absolutely. Yes.
Okay. That these are the terms that you should incorporate when you renew and stuff.
Yeah.
Like that.
Yeah. For example, one of our other role is that healthcare costs are rising. And so there will always be a cost inflation on the premium next year. But how could we help a company to flatten that cost curve by suggesting certain recommendations? For example, if let's say there's another third wave of COVID expected, how about taking a lower cost COVID policy and have the COVID claims be booked on that policy, so that your main policy's claims ratios don't shoot up too much? So there are some of these permutation combinations which can help the company give the benefit, but also flatten the cost curve.
Right. How do you enable a smoother claims experience for employees?
Yes. So I think on the claims part, you would think that it is all about reducing time, but it's also about expectations and reality. So the thing is, like, people expect that claims will happen at a certain time, and then they don't happen, which is why they have a bad experience. What has been missing is a Zomato and Swiggy like order tracking flow. This is when I'll get it.
This is the stage where it's at.
So that is the level of transparency that is needed. Then if there are certain deductions that will happen in the policy, a person needs to know why it is. What does my policy terms say? Based on that, this is why a certain deduction has been made in the policy. So for example, one of the most misunderstood policy terms is room rent limits. There's a clause, let's say a 5 lakh policy, and it will have like a room rent capping of, let's say 5,000 rupees. Now, someone has stayed at a 10,000 rupee room for 5 days. So the assumption is, ठीक है, 25,000 कम मिलेगा on a total bill of, let's say, 5 lakhs. However, the billing system of a hospital is like a restaurant. AC में खाया तो ज़्यादा and non-AC में खाया तो कम. But since you're only eligible for half the room, on a 5 lakh bill, you'll only be paid 2.5 lakhs. And this is important to even consult a client when they are purchasing the policy the first time around. And let's say if, they've taken a policy which has only a 5,000 rupee room rent limit, that needs to be explained to the employee that, look, this is the reason why a certain reduction has happened. So I think that transparency on that step, awareness on day one, even like, for example, when the employee is choosing which room to go after, can we consult and tell him then and there that, look, this is the policy term and this is the recommended option basis that.
What about taking care of the paperwork? I know like filing claims needs a lot of paperwork. You need to collect all the bills and then submit those bills and all that.
Yes. So we provide a claims concierge who is on the call with the employee and handholding them through every step of the way. Today, they can upload documents on our mobile app. We do like a check if everything is through. And
They can just click using the mobile camera and
Correct. Now, there are some insurers which are processing claims just based on soft copies. There are some insurers which are still requiring you to physically courier the documents. But I think the industry is moving in the direction where it will be completely paperless and you can just take photos and get it done.
If
through
you
that.
like the Founder Thesis podcast, then do check out our other shows on subjects like marketing, technology, career advice, books, and drama. Visit thepodium.in, that is thepodium.in, for a complete list of all our shows.